but not a great day coming in for the markets. Somber move coming in on the benchmark indices as indicated by SGX Nifty, and as you can see right now we are drifting a bit lower from those opening high levels. Right now the Nifty is hovering around the 18,370 odd mark. You have Sensex that is trading lower by about 90 odd points. You have Nifty Bank as well, trading in tandem with the benchmark indices with 0.2% downtick coming in for Nifty Bank as well. Let's take a look at what the advanced decline ratio is looking like at this point in time, and at this juncture it looks like it's in the favor of the declines as we speak. On the Nifty you have L&T, Tata Consumer, HDFC Life as a set of gainers, but on the flip side you have Hindalco, Titan, Tata Motors, Apollo Hospitals, all of them declining trade. Add to that even Tata Steel is down in trade today. Talking about the sectoral indices, only a few that are gaining, and the one that is noticeable and the only one rather right now which is in the positive territory is the FMCG index that's trading with really mild gains as we speak. You have Nifty PSU Bank Index which has drifted into the negative territory as well. On the losing side, you have Nifty Metal Index, that's the top sectoral loser as we speak. You have Auto Index that's down about approximately 1%. IT Index is down 0.8% as we speak. So is the Pharma Index under pressure in today's trading session, Adiraj. So that's the way how the markets are looking like for now. It's a very muted trading session in the negative territory, and you have most of the sectoral indices in the negative.
Right. Many thanks, Cheryl, for that. You are also wearing red today. But moving on, sugar stocks have been buzzing off late. How have the stocks moved been, and what are the reasons? My colleague Ashesha is here to tell us more. Good morning, Ashesha. Take it away.
Yes, sugar stocks have been buzzing over the last many trading sessions. The likes of Dhampur Sugar, Sri Renuka Sugar, the Balrampur Chini and Awadh Sugar are gaining anywhere between 4 to 7% in the last 5 trading sessions alone. So let's understand why are they gaining. One, international sugar prices have been surging. Raw sugar prices are trading at 7-month high levels. ICE sugar has gained nearly 7% in the last 1 week alone, and raw sugar prices have gained 15% from their October 2022 lows. Let's also understand why global sugar prices are rising. Brazil, which is the world's largest producer and exporter of sugar, is focusing on biofuel, and hence there are concerns of supply from Brazil into the global sugar market. Indian sugar exports have also been capped at 6 million tons for this year up until May 2023 versus 11 million tons of sugar cap that was imposed by the government in sugar season 21-22. Additionally, reports also suggest that Indian sugar mills have been renegotiating and defaulting on contracts to supply sugar, and this is being done because prices have jumped after government imposed that export cap of 6 million tons for this festive season, and hence now they want to contract at higher prices versus the contract price which is lower as compared to the current prices. So surge in global sugar prices and renegotiation of contracts by mills is the reason why sugar stocks have been in focus for the last many trading sessions.
Right. Thank you so much for that, Ashesha, for putting into context what exactly is happening in the sugar space, and it is actually logging in some sweet gains of late as well. Let's bring on board our experts for today. Then we have Kunal Bothra as well as Vikas Sethi joining us this morning. A very good morning to you, Kunal, as well as Vikas. Thank you so much for joining us on Buy Now, Sell Now. And Vikas, I'll come first to you. We heard about what exactly Ashesha had to speak about what's happening in the sugar sector as a whole. You've seen the raw sugar prices scale up to the 7-month high levels. Where do you see the Indian sugar sector headed, the sugar stocks in particular, and what do you think is working in favor of these counters?
Yeah, good morning, Cheryl. Good morning, Adiraj, and good morning, Kunal. Now, as far as the sugar sector is concerned, the sector has been doing well over the past few days. The reasons have been aptly covered by the correspondent. The international sugar prices have been firm. They've gone up by close to 15% over the last 15-20 days. And the reason is also there because internationally there's been sugar shortage. First, Brazil, which is the largest producer of sugar in the world, there's been some crop failure and they're diverting sugar to production of ethanol, so which has led to scarcity across the globe. And to add to that, there's been heat wave in Europe, which has also destroyed sugarcane crops, and that's also led to firming up of international prices. And India also limiting its exports has been a factor for increase in international prices. So that is working well for the sugar sector. But however, our stocks would have done really better, or really much better, if there was no limit to the cap on sugar exports. But since the government has put a cap, we've not seen that much of benefit because of the international firm sugar prices. But all said and done, sugar sector looks good. First thing, the stocks have corrected sharply ever since the government imposed a limit on sugar exports. And then the current year exports have also been brought down to 6 million tons from the earlier 11 million tons, which has been a negative. And that's the reason why the stocks had corrected earlier. And now that the sugar prices have firmed up, and there's a story of ethanol also with the sugar sector. Ethanol blending, the government is pretty serious about it. They targeted 10% blending last year, which they have achieved, and now they're targeting a blending of 20%, which could lead to a huge demand for ethanol. So that would also be pretty positive for the sugar sector and would move it from being a cyclical industry to from being the cyclical sector. So I think one should look at buying into sugar stocks now. The best among the lot would be Balrampur Chini, which is the leader in the pack. And to add to that, I think EID Parry, Andhra Sugar, and even Dhampur Sugar, Dwarikesh Sugar, Triveni Engineering, these are the kind of stocks which I like. And I think any correction in these stocks should be used as buying opportunity from a medium to long-term perspective.
Right, thank you, Vikas. And what about you, Kunal? A very good morning, firstly. Now, the sugar stocks have been buzzing off lately. Which particular stock are you backing?
So I would go for Balrampur Chini as one of the top picks. I think the stock has done reasonably well. In fact, what I like about the chart is that it's come back towards a major low. Now, we always look out for retracements when a stock comes back towards the previous support. And if that coincides with the trendline support, it's all the more attractive because the risk reward is very, very positive at those levels. So for Balrampur Chini, we are at that point where the stock has come back towards a major multi-month low in terms of price. It's also come back towards a major trendline support from the 2020 lows as well. So both the charts, I mean the factors indicate that the stock has come back towards a attractive risk reward buy. So if I have to pick and choose one stock from the entire sugar pack, that would be Balrampur Chini.
Right. Many thanks, Kunal. But Vikas and Kunal, stay with us as we slip into a very short break. But don't go anywhere. You know the drill, viewers. Start your questions coming because once we come back, we start with the queries.
Hello and welcome. You're watching.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
Out of this cup of coffee, is costing you 25 rupees right now. After 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And Vikas, since the last time we actually interacted, that is you and I interacted, we've seen the markets actually hit a 52-week high levels, at least for the Nifty. You had Nifty Bank that scaled the record high levels. No doubt it's taking a breather right now. But in such a market scenario, we have kind of gone past those extreme volatility phase. Now we are seeing the markets take a breather and consolidate at these levels. But what should investors do with their wealth? How should they protect their wealth from further erosion in case there is a volatile environment back again?
Now, the first thing is, for long-term investors, my advice would be to stay put with quality stocks. I continue to remain bullish even from the current levels. Although we have seen a sharp rally over the past few days, FIAs have also come back, and we are seeing daily buying figures from FIAs. Even DIAs are not selling that much. They're also doing a little bit of buying. So I continue to remain bullish, and internationally also the news which were negative until now have started turning positive. We've seen the peak of the inflation numbers in US also. We've seen inflation coming down. So that could lead to some Fed might start looking at rates differently. They may not look at aggressively hiking rates from here on. So these things point out to the markets remaining buoyant, and India is in a sweet spot with our corporates doing well. Our inflation numbers are much manageable. So I remain bullish on these markets, and after such a sharp rally, it's justified that the markets are consolidating at the current levels. And I think one should stay put and use any major declines in the markets to accumulate quality stocks from a medium to long term point of view.
Right. Thank you, Vikas. That was our investor's guide coming in for the benefit of our viewers. But let your queries start as we are going to begin the query segment. You know what to do. We are live on all our social media platforms. That's Twitter, Facebook, and the numbers flashing on your screens, which is for WhatsApp. Without further ado, let's start. Kunal, coming to you now. Narayan's writing to us from Bangalore. 1,000 shares of Granules at an average buy price of 374 from the last year. Should he continue to hold or switch? He's also asking to suggest a better alternative.
No, I think it's a good stock to hold on. I would suggest to hold on to the stock. It's just nearing a breakout after months of consolidation and correction for itself. So give it more time. I believe that the potential for Granules could be far more superior over the medium term. So I would suggest a hold.
Right. Let me take the next query. This one is coming in from Arkash Mathur. I made sure that I take your name right this time, Arkash. He has ICICI Bank purchased at 777 rupees per share. IDFC First Bank purchased at 51 rupees per share. He wants to know what's the long-term target for both of these counters and what price that he can add more. Will you be able to talk about the pricing of both of these stocks by any chance, Vikas, or either of them for the matter of fact?
Yeah, Cheryl, both the stocks are on my radar and both the stocks have been doing well. ICICI Bank remains my favorite pick from the private sector banking space. The stock has been doing well, and the investor needs to be complimented for having bought the stock at good levels and holding on to it. I see very good upside in these banking stocks from here on too, because the sector itself has gone through a tremendous change. The asset quality of most of the banks have improved. The credit growth is picking up. So ICICI Bank remains the best bet. I would advise him to continue to hold, and I think we can easily see a 20 to 25% upside even from the current levels in the next 1 year. And as far as IDFC First Bank is concerned, I think from among the smaller sized banks, this bank also looks good. The investors bought it at a right price. It's sitting on some profits, but I think there's much more profits ahead in this stock too. So I would maintain a hold in IDFC First Bank as well.
Right. Coming back to you, Kunal. Padma Shivarao is writing to us from Bangalore. Wants your perspective on Dhani Services at the current price.
I frankly, I've not liked the charts as well. I think I remember tracking the stock when it was almost at 375, 400, some year and a half out back. But from there on, the stock has just corrected very sharply. I think if you're looking to buy also the stock, you should try and avoid.
All right. This next query that I have is coming in from Santi and holding Infosys at 45 shares, a price of 1,421 rupees per share. Is it a good strategy to sell at current market price and buy at a lower level? And he's also mentioned that if Master Kunal agrees, please give the sell and buy price for the levels. Master Kunal?
So the stock name is Infosys, right?
Yes, Infosys.
I would suggest to hold on to the stock. Thank you for the adjective, but for the stock, I would suggest to hold on. My belief is that, see, always look at it this way: when the prices always recover first, the news always comes back, after some bit of time. So this is the period where most of the IT stocks are getting into a recovery phase. Large cap IT stocks recovering first is always a healthy sign that the sector is making a strong comeback, and it could be more of a possible durable comeback for the entire IT space. So I would probably be of the belief that you should look to hold on to your existing investments on Infosys.
Right, and talking about actually, thanks Santi for actually reminding us with the adjective that you use for Kunal, Master Kunal. So Master Kunal, let me remind you, tomorrow is BNS and Pashala Day as well. It's Friday. So yes, for all of our viewers who are tuning in, you will learn something new when it comes to technical analysis. So don't forget to tune in for tomorrow's edition of Buy Now, Sell Now. But Adhiraj, you can take over for the next query.
Right. Thank you. Vikas, coming to you for this one. Balaji is writing to us from Coimbatore. He's asking about Cochin Shipyard, Mazda, Dock. Between them, what's your take?
No, both Adhiraj, both the stocks look good. They cater to the defense sector, and the sector has been extremely bullish, and both these stocks have seen a sharp run up over the past few months. I like both the stocks, but from a valuation perspective, I think Cochin Shipyard would be a better bet. But if one has both of them, I would maintain a hold in both of them. But if one were to pick one of them, then I think Cochin Shipyard at the current levels looks to be a better bet.
All right, the next query that I have is coming in from Manish Raju. Kunal, one more for you. And he's asking, do you recommend buying Mirza International and Paytm for 1 to 3 months, and if any levels that you could suggest?
So Mirza International, you can look to buy. I think, the last 2 months, I think from September highs of 375, the stock has completed that corrective phase. So when a stock corrects by more than 30%, we call it as a good point where the stock, the trend sort of balances out. It's come back slightly above the 200 moving average. So the correction is also halted above the 200 DMA. All of those factors somehow seemingly appear to be more positive for the stock price if you're looking to initiate a buy. Paytm, I would avoid, stocks which are in the thick of a lot of news flow, goes into a very sharp downtrend, opens with a gap down. They are not comfortable, stocks, because if in case the stock, falls by another 5 to 10%, then you would probably be, getting into a zone where, you may look to go into an exit mode rather than just holding on to the stock. So it's always better to wait out for the phase where the stock starts to get into a rally. The rally is more calmer and stabler for the stock price. So I would suggest an avoid on Paytm as of now, but for Mirza International, you can look to buy.
Right. A very regular of our viewers, Manikandan from Kerala, is writing to us, bought United Spirits Limited 50 shares at 867. What should you do next? Kunal?
I would suggest to hold on. I think the stock is nearing a breakout of this 900 mark. We've seen liquor space or liquor stocks starting to get into a recovery phase. Now, the only concern with United Spirits, and I've highlighted this over the last couple of days as well, that 900 is a important resistance for the stock. Somehow closer to that 900 mark is where you see the trends fizzling out. There is some negative news flow, some selling which emerges into the stock price. Now, it's a matter of time that the stock absorbs all of this negativity and makes a bounce back again. Since you've bought at lower levels of 850 approximately, I would suggest a hold.
Okay, the next one is coming from Narayana Appa, and this one is specifically for you, Vikas. He's holding 250 shares of Bandhan Bank, which is purchased at 299 rupees per share. He wants to know whether he should average switch to some other stock. How does the prospect for Bandhan Bank look like to you? Because this one actually tends to move very sharply with when there are certain news flows, state level actions that are happening. How should one trade in Bandhan Bank as an investment?
No, Cheryl, clearly from an investment point of view, I think there are better stocks to invest in from the private sector banking space. And if one wants to look at the smaller size private sector banking space too, I think one could look at the one which we discussed just now, IDFC First Bank could be a better bet. And even Federal Bank looks better. So my advice to the investor would be to get out of this Bandhan Bank, because it's one of the most volatile among the banking stocks, and look to invest in either a Federal Bank or an IDFC First Bank and give them time or stay with them for long term, and I am sure they would realize better returns than Bandhan Bank in those banks.
Right. Vikas, this one's for you. Ramesh from Bangalore asking if Tata Steel is a good buy for the long term.
Yeah, Dheeraj, I have a contrarian view on Tata Steel. I think at the current levels, the stock becomes a good bet for medium to long-term investor. Although the sector is not doing well, it is also one of the most volatile sectors, depending on the kind of news flow we get from international markets. The metals keep going up and down, but then I think at the current levels, there's nothing much to lose as far as Tata Steel is concerned. It's corrected from its highs. The metal cycle is at the bottom. Looks like the results which these companies have declared recently, I think they are the bottom, and from here on, they should start looking up. And once international geopolitical tensions get resolved, I think all these metal stocks, and China also opens up fully, I think these metal stocks would start doing well. So at the current levels, Tata Steel remains a good bet for medium to long-term investment.
All right, the next one is coming in from Ram Sankar, then Kunal, and this one is for you. He wants to know if it's right time to accumulate Tata Chemicals.
Well, it is the right time to accumulate Tata Chemicals, but my only concern is that the last 1 month of sell-off for Tata Chemicals and most of the other chemical names, I think Navin Fluorine, Alkyl Amine, many of these stocks have fallen, all of a sudden. Their trends were far more stable and stronger prior to that. Now, this sudden sell-off which has happened across the board for these chemical names probably brings in the point that this is more of a sector-based distribution or profit booking which is happening. Now, when there is a phase of sectorally profit booking, it's very difficult to anticipate that when would the entire selling get over. Ideally, a 10% to 15% downside is a good enough zone where we look to probably expect that the stock-specific correction is over. So, if that's the case, then possibly just around the 1,000-odd mark, Tata Chemicals can also try and complete this phase of selling, and that could be a good level where you can look to buy or chip in.
Right, on that note, slipping into a very short break, Kunal, Vikas, stay with us, and viewers, keep your questions coming. We'll be right back.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge. With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and this is a show where we get all your stock queries answered by our experts. And today's experts are Kunal Bothra as well as Vikas Sethi. And there are a lot of actually short-term queries that I've been finding, but let me take this one to you, and this one is for you, Vikas, because Soumitra Joshi has written to us and he's saying that he's been following you quite closely. He's saying that you have been a proponent of Ambika Cotton Mills. He's saying that the stock now has drastically corrected and not really given much returns in close to about 7 to 8 year period. He wants to know what are your views on Ambika Cotton right now, and at this level, what should his strategy be with this counter?
Yeah, first, I would like to thank Soumitra for following me. As far as Ambika Cotton is concerned, the stock did really well last year when textile stocks were doing well, and it went to touch highs of around 2,800 odd. And from there, it had seen a sharp correction in line with other stocks in the textile space. But I continue to remain bullish on the stock. The fundamentals are good. The valuations are cheap. The stock trades at just about 5 times its earnings, trailing 12 months earnings. And I think from the current levels, the stock should be able to do well. I would advise the investor to continue to hold on to the stock, and I'm sure in the next, say, 1 year, we could see 25 to 30% upside from the current levels of this stock.
Right. One of our most avid and special viewers now, Mr. TP Vinod from Salem, has written to us yet again. Kunal, of course, this one's for you. He's holding 2,000 shares of NBCC at 60. He's asking whether to hold, average or exit. He's also said that this is for 2 to 3 years time frame.
Well, I would suggest to hold on now. I would believe that most of the PSU names are making a very strong comeback for themselves, and we've seen what's happened to most of these names over the last 5-6 months from the June low specifically. These stocks have gone into a different kind of a trend altogether. Same is the case, which I believe could probably happen with NBCC as well. The stock seems to have established a major base or a major support sub 20 mark. It's now and the recent low, I think the month of June, was just around the 30 odd levels for NBCC. It's moved up higher by more than 30% from those levels. So I believe that the prospects over the medium to long term look very attractive. I would suggest a hold on NBCC.
All right, another one coming your way, Kunal, and this one is coming in from Abraham Thomas. He wants your advice on Info Edge. He's saying that he's bought 25 shares at a price of 4,950 rupees per share for the next 6 months. What's your view on this one?
Well, you can continue to hold on. So, Info Edge, I would probably club, stocks like IndiaMart, etc. These stocks, they tend to participate in a very strong phase of a market uptrend, where it's not just the index moving up higher, but the overall market sentiment is also quite bullish. Right now, where we are into a zone where the markets are moving up higher, but the sentiment is not as bullish as what it was maybe a year or a couple of years back for the index. And that's why I believe that most of these stocks, they tend to give you a breakout, but then the breakout doesn't sustain. Same is the case with Info Edge. The stock in the last, I think, 2 or 3 days had gone up to 4,400, but then from there it's corrected also sharply for itself. I would suggest a hold. If possible, to reduce your cost price, you can look to average if the stock comes back towards, say, 3,750 mark.
Right. Vikas, coming to you now. Swati has written to us. She wants to raise some funds by selling some stocks. She's asking you for her advice which ones to sell between GCPL, ABFRL, Lemon Tree or Indian Hotels. Shall I repeat the stock for you?
Yeah, I'm right.
Right. It's between GCPL, ABFRL, Lemon Tree or Indian Hotels. She wants to get rid of two to raise some funds.
Actually, all these stocks are good stocks and in uptrend. The one thing which she could be doing is, from among hotel stocks, she's holding 2 hotels, Lemon Tree as well as Indian Hotels. So I think she could sell one of them. And although I'm bullish on both of them, the sector is doing well and the stocks have also done well. But I think if one were to necessarily sell one of them, then I think she can get out of Lemon Tree and stay put with Indian Hotels. And ABFRL also, I remain bullish on them. And GCPL is another stock. If she wants, she can get out of this and continue with ABFRL at the current levels.
Okay, this one is coming for you once again, Vikas. This one's from Mayank, and he's saying, Vikas ji, he's holding 2,000 shares of Federal Mogul at a price of 300, or I believe the price of Federal Mogul is 2,000 rupees. Let me just cross-check that once for you. Federal Mogul, he's saying that, yeah, he's bought 2,000 shares at a price of 300 rupees per share. And he wants to know whether it makes sense to add for the next 3 to 4 years. What's your take on this one, Vikas? Do you track Federal Mogul by any chance? And it's a right strategy to hold on for a period of 3 to 4 years and add on to it?
It's a good quality auto component company, although the stock has not done well. But over the last few months, the stock has performed, and that has to do with the merger which has happened internationally in the parent company, and which could lead to triggering of an open offer in India also, and that could come at a significant premium to the current market price. So I think one should continue to hold on to the stock and wait for these things to pan out.
Right. Vikas, coming to you again. Shriram is writing to us from Delhi. He wants to buy Thermax Limited in a SIP format.
Now, again, a very good quality company. Fundamentals are good. It's been a good performer, and I'm bullish on the capital goods sector. And from that sector, Thermax looks to be a good bet. I think she's doing the right thing by doing an SIP in Thermax.
All right, this one is from Sri Kutan, and he's saying he's holding AIA Engineering at a price of 2,600 rupees per share. Kunal, he wants to know what's your short-term technical view on this one.
See, in the last 3 days, the stock has fallen very sharply from 2,800 to sub 2,600. I think 2,534 is where the stock is trading right now. On the last 3 days of this selling, the stock has formed a very bearish kind of a candlestick pattern. This doesn't sound or look very good for the stock. This probably indicates that this may be at a cusp of a reversal, at least over the short term. So we may possibly look at another 200 point of a correction into the stock price if there is no immediate recovery, like for example in intraday basis or maybe at max one-day recovery for the stock. So I would suggest that you look to exit as closer to your cost price as possible, and then look to buy back again if the stock corrects by 200 points, which may be around the 2,350 odd mark for AI Engineering.
Right. This one's coming for you, Vikas. Rajni is writing to us. Please comment on Mindtree, on the LTI and Mindtree merger. Purchase which one before the merger and at what price is what he's asking.
Actually, to be honest with you, Adhiraj, I've not looked at the details of the merger, but both the companies are good. And now that the ratio is known to the market and the merger has been approved, I think they could be behaving in tandem. So I think she can buy any one of them, and that would not make much of a difference if she's a long-term investor, and this company would do well over the long period of time.
Ashok, this also query resolves your also doubt that you had on LTI and Mindtree as well. Ashok Kumar from Tirupur also written to us on a similar query, Vikas, actually. Let me take this next query. This is from KR Balan, and he's been writing to us regularly. I've been missing his query. I apologize to you, Mr. Balan, for doing that. He has 500 shares of Sigachi Industries Canal. He bought it at 260 rupees per share. 500 shares of Campus Active at 440 rupees per share. Now he wants to know whether he should sell both of them and look to shift to SBI and TCS for the medium term. Do you think this strategy is good to get out of mid-cap, small-cap companies and shift directly to the large caps?
See, as a broader call, of course, it makes a lot of sense to switch from the mid-cap, small-caps towards the large-cap names. But the timing is the concern over here, because SBI is not something which is available at 530, 550 rupees. It's at 600 plus. But then when you try and compare to the likes of Sigachi Industries as well as Campus Footwear, the stocks have already gone through a corrective phase. So maybe I think it's the tweak of timing which you need to get it right. Possibly wait for maybe another few weeks. My sense is that Sigachi Industries as well as Campus, both these stocks, they can make a strong bounce back from here on. So even if they bounce back, say 5% to 10% from current levels, that could be a good point where you can look to make that switch.
All right. On that note, actually, let's slip into a break on this edition of Buy Now, Sell Now. But when we come back, we will continue with the viewer queries. And yes, Adiraj's favorite segment of the show, and that is the rapid fire. So viewers, don't go anywhere.